So let's talk about fake breakouts, and I'll even show an example of a fake breakdown, but this is a question that I get all the time. People ask, how do you know which one's gonna work? I don't know. If I knew, I would be a billionaire because I would be able to wait for the ones that I know are gonna work, take full advantage, and make a ton of money. But that's not how it works. Nobody knows which one is gonna work. The most important aspect when it comes to fake breakouts or fake breakdowns, the ones that don't work, is gonna be managing risk. So you have to try to think about it slightly different. I know in the beginning of my trading career, I was trying to figure out a way to be right all the time, but that's never going to happen. Nobody wins trades 100%. So there's going to be those ones that just don't work and they go against you relatively quickly. So at the end of the day, the most important aspect when taking a trade is to think about the risk first on it, not thinking about winning and making money. So get it out of your head, trying to figure out how to be on the right side of every single trade that you take and start thinking more about the risk management of things. The moment that I take a trade, I think, hey, this could easily go against me. I just have to make sure that if it does, let's not be stubborn and let's get out of it. I can always reevaluate the setup again if it looks good. I know this is a lot easier said than done, but if you can think about it in those terms going into the trade, then you can kind of accept the outcome and not get upset when you lose. So now let's go over some examples because the main point of this video was going to show a lot of examples of fake breakouts, things not working, and how I'm going to try to go about managing risk when I get in that trade and it goes against me. So that way, when I'm in a losing trade and that trade does not go my way, I want to make sure that I can keep that loss relatively small because it happens. Welcome to trading. And the first example that I'm going to go over is going to be on Tesla. And this was Monday, November 21st. This was an example of a fake breakout. But even before going over the fake breakout, the reason why I don't love this setup is because if you see right here, this white line, this is prior day close. So Tesla gapped down. So even though this was approaching the high day, it was still red on the day. For me, if I'm going to focus on breakouts, I want them to be green on the day, show a lot of strength, not when they're red and they're approaching the highs, because I've noticed, especially in a bear market, if I were to go for those breakouts at high a day, but it's still red on the day, I feel like they fail more often than they work. Now let's break it down on the intraday. So these are going to be 2-minute charts, and the indicators that I like to use is going to be the 9 EMA and the VWAP. The 9 EMA is going to be the orange line, and the VWAP is the green. So let's just break down really what happened. Off the open, it had a nice 2-minute downside opening range break, and then this thing found some support, and it started to creep its way towards the highs. So it got back above the 9 EMA, and the VWAP was showing some short-term strength, looked pretty good for a breakout. Now let's say I wanted to take this trade. I'm going to try to anticipate the new high day just a little bit. So as you can see, the high day is right there. For me personally, I'm always trying to anticipate the breakout a little bit. I don't want to see it get above the high and then get in. That's just my way of going about trading. That's what works best for me. So let's say I were to anticipate this. The high day was right around 176.80. Let's say I'm pretty good. I get in at 176.40, 176.50, and then I want to see this start to speed up in my favor pretty quickly. It does not break that high day and immediately rejects it. So this is what I'm going to start thinking of. This could possibly be a fake breakout. Now, what I'm going to try to do is get out as quickly as I possibly can. And similar to the video that I posted a little bit ago, where's the worst case scenario? If I got in on this green candle, which looked really good, above the 9 EMA, above the VWAP, anticipating that high day break, the breakout, and then it clearly gets stuffed, fails at resistance, and starts to roll over, my stop is going to be the low of the candle that I got in on. So that way I can get out, try to keep the loss relatively small. It happens. Even though it sucks to take those quick losses sometimes, look at what I avoid. Imagine if you had held this and hoped, you end up getting destroyed and take a huge loss. Now let's go over another example. And this is going to be on Tesla, November 22nd. And the reason why I think this is a very good example is because this kind of goes with the rules that I was talking about. So what happened off the open? Had a push higher, sold off, ends up having a double bottom, and then bounces for a nice big move higher, gets back above the 9 EMA and the VWAP, and it's above prior day close, so it's green on the day. So this does look pretty good. Here's the high day, going for the breakout. So if I was really good, I would try to anticipate the breakout in this green candle. So the high day is right around 170.80. So if I was good, getting in maybe 170.40, 170.50, 170.60, trying to go for the breakout. I want to see it get above high a day and continue higher because who knows, maybe this could catch some upside momentum, and then this does not follow through. So just breaks out a little bit and then immediately rejects that resistance. Where is my stop going to be? the low of the candle that I got in on. I'm usually pretty good at getting out before that. So even as this red candle is forming, I'm going to try to bail on the trade. But if for some reason I happen to be slightly more patient, that worst case scenario is going to be low of the candle that I got in on. I don't want to lose more than one candle. And the reason why is because I know this is hindsight again, but it ends up being a good stop. Because had I bailed, it doesn't feel good to take a loss, but you have to do that when it comes to trading. But getting out right here, look at the downside that I avoid. And then vice versa, let's go to the example of the fake breakdown, which happens. So this had a nice move lower, bounces to the 90 EMA and the VWAP, fails to go higher, starts to roll over again. It's red on the day because it's below prior day close. And then I would think this looks pretty good. Hey, maybe if this makes a new low, this could continue lower and really start to sell off. So if I'm good, I'm going to try to anticipate that new low. The new low is right around 166.20. So if I were to get short right around 166.50, 166.40, I want this to break down and start to speed up in my favor. Worst case scenario, my stop is going to be the high of the candle that I got in on. And look how good of a stop this ends up being. So it ends up being a double bottom. It does not break down. I'm sure that there were plenty other people thinking the same thing. So that way it doesn't follow through quickly. I'm going to get out worst case scenario, the high of the candle that I got in on, and look at the pain that I avoid. Here's another great example. So this is NVIDIA, November 23rd. It actually opened above prior day close, so it was green on the day, and then it stayed green, and it was trending higher. So it looked great above the VWAP, above the 9 EMA. Here's the breakout spot. So the reason why this looks pretty good is because it had a very big move higher and then pulled back, but it didn't pull back that deep. So it showed that buyers were in control and it was consolidating above VWAP. This looked like a nice breakout for a new high day. And we all know that if something makes a new high day after a long period of consolidation, who knows? Maybe it can go a lot higher. So if I was good and I was able to get in this, anticipating that new high, the new high is right around 164.50. So if I was good getting in at 164.30, 164.40, and then it gets the breakout. And the reason why I think the stop of the low of the candle that I got in on is pretty good is because this looked great. Nice big candle through high day. This breaks high day and closes strong and then makes a new high. So I'm thinking this could be a big winner. I want to wait for that big move. Now, I just take quick moves anyways, but just kind of going over the mentality and the psychology of the average trader. All right, it's time to hold my winner. I want to see this thing really get going to the upside. What happens? Immediately reverses and breaks the low of that candle. Now, I want to get out worst case scenario at that spot. Now, a lot of times I do pretty good where if it gets above that high a day, I'm looking at the option contracts and I try to get out at break even. So the moment that this starts to aggressively pull back, I do a good job at just getting out. But worst case scenario, the low of that candle that I got in on. And the reason why hindsight, this is a pretty good stop is because look at the pain after. And the last thing that I want to do is be in a situation where I'm holding and hoping because yes, sometimes it does come back. That can build a bad habit because the time that it doesn't come back is the one that really destroys your account. So those are some examples of fake breakouts and even showed one on a fake breakdown. At the end of the day, nothing works 100% of the time. When it comes to thinking about breakouts and breakdowns, it's not the mentality of which one works. How do I know the one that's going to work? Nobody knows. The most important thing when it comes to breakouts and breakdowns, that kind of strategy, is being able to get out of the way quickly when it doesn't work. That's what matters most. So try to change that psychology from trying to figure out which one is going to work, being on the right side of every trade, to taking risk, putting on that trade, but being able to accept the fact that not everyone is going to work and getting out of the way quickly when it doesn't go your way. So that's my opinion on fake breakouts and breakdowns and how I try to think about them when it comes to the psychology of things. Nothing's going to work 100% of the time. I just accept that that's the case. Welcome to trading. And then I want to make sure that when they don't go my way, I need to get out quickly so that way I don't take a big loss. That's it for the video. Hopefully you got some value. Feel free to like and subscribe, and I'll see you in the next one. Thanks for sticking around to the end of the video. I just want to talk about a couple cool things that I have to offer. The first is going to be my newsletter watch list. This is exactly what I post on my private Twitter 30 minutes before market open every single day. I do a quick analysis of the overall market, the SPY and the Qs, if there's any major market news that day, and then all the stocks I'm interested in watching, it's usually 4 or 5, if there's any major news tied to them, and all the levels that I think are in play. To the left, this is exactly what I'm posting on my private Twitter. I make sure to add that newsletter. I take a screenshot of the charts, green line to the upside being long, red line to the downside being short, and I make sure to highlight those two levels above. This is everything that's going on in my mind and my game plan going into each market open. Also, I make sure to add a little mental note because every day is slightly different, and here's an example of that. And if you want something that's a little bit less of a commitment, I do offer a live one-on-one call for 1 hour. This is where you can ask me questions about my journey, go over setups specifically, everything that I've gone through as a trader. Whether you're beginner or advanced, this is a great way to connect with me. So if you're interested in my private Twitter or the one-on-one live call, feel free to go to callmattdiamond.com or check out the links in the description below.